Welcome to Kaif Finance. Here we break down the secret moves of corporations and global elites on the world stage. Hit subscribe and leave a like so you never miss crucial inside information.
Yeah.
So, look at your stock portfolio right now. You probably feel, pretty smart holding those index funds, but what if the public market you trust is effectively dead?
Just a slow-moving graveyard.
Essentially, yeah. A dumping ground where the global elite offload their leftovers.
It's a chilling thought, but the sources we're digging into today point straight to that reality.
Right.
We're analyzing the shadow equity market.
Right.
We're talking about an unregulated $10 trillion private secondary ecosystem. It's where the top 1% is quietly transferring massive wealth, completely walled off from the public eye.
We're conditioned to view the highly regulated, transparent public market as the gold standard of fairness.
Right, but these documents map out how that's just an illusion. The real generational wealth is being minted in this private secondary market.
It's a financial Wild West where the traditional rules of engagement just don't apply.
And in the shadows, there's zero transparency. Decades ago, a company went public early, letting everyday investors ride that massive growth curve.
Yeah, but today, tech titans stay private for over a decade. Those 1,000% returns are locked behind closed doors.
Totally inaccessible unless you're already on the inside. And because the founders aren't selling their own equity, they squeeze the liquidity out of the employees.
You've got these senior developers in Silicon Valley sitting on $5 million in paper wealth, but they're trapped in golden handcuffs.
Exactly. On paper, they're millionaires. But you can't buy a house or pay college tuition with illiquid stock options.
No, you can't. And if that developer tries to leave, they hit the alternative minimum tax wall.
They owe Uncle Sam massive taxes on the paper gains of those options, usually within a brutal 90-day window.
Even though they can't sell the shares to actually pay the tax bill, so they're desperate for cash, and that's when the vultures circle.
Elite private equity funds approach these cash-strapped employees and offer to buy their shares.
But at a massive 40 to 50% discount. The employee has to take the hit, meaning the elite scoop up the best assets for pennies on the dollar.
And the mechanism they use to acquire these shares is completely opaque. They're using special purpose vehicles, or SPVs, but not just to pool capital.
They're using them for blatant regulatory arbitrage.
Right. By bundling hundreds of investors into a single line item on the cap table, they legally bypass the SEC's investor limits for private companies.
While entirely hiding the true asset owners behind closed doors, you'd think moving $10 trillion through the back door and bypassing investor limits would trip a few SEC alarms.
But the sources point to a deliberate blindness.
It's hard to read it as anything other than direct, quiet collusion.
By keeping the barrier to entry impossibly high and looking the other way while SPVs exploit the loopholes, regulators are ensuring the working class remains locked out of the highest returns.
The system isn't broken. It's functioning exactly as intended by the people at the top.
Which totally recontextualizes the modern IPO. It's not a success milestone anymore.
By the time that bell rings on Wall Street, the private funds have already squeezed every drop of massive growth out of the company.
An IPO today is simply a calculated exit strategy.
It's a mechanism to offload overvalued, squeezed dry assets onto unsuspecting retail buyers.
To put it bluntly, you are the exit liquidity for the billionaires.
So that index fund everyone feels so smart holding is essentially the elite's recycling bin.
You really have to stop blindly trusting public offerings when the true economy operates behind non-disclosure agreements and opaque SPVs.
It completely rewrites the rules of building wealth.
It does. And if we connect this to the bigger picture, it leaves us with a massive looming question.
If this opaque, unregulated shadow market is essentially a giant bubble of inflated private valuations, what happens when it finally bursts?
Will the elite bear the cost, or will the resulting shockwaves secretly drag the entire public market and your retirement down with it?